Welcome back to the Dividend Diplomats YouTube channel. You got your favorite dividend investors out here of all time, guys. We've been doing it. We've been your number ones, hopefully for more than that decade, guys, because we're going on 11 years of putting out content from the blog to the YouTube, guys. We're here bringing it to you guys on a lot of social media channels. But today is all about an industry that might be a safe haven potentially when it comes to tariffs, when it comes to recession, when it comes to inflation, guys. This industry may stand well during this interesting and tough time. And I'm putting up three stocks that I own from my portfolio to see what Bert thinks and what you guys think, if any of these three are stocks to buy right now.
Smash that subscribe button, everyone. Give this video a thumbs up. Let's talk about some dividend stocks, but more importantly, let's research stocks and get ready for WrestleMania. I think that's what everybody really wants to hear.
The road to WrestleMania, the road to dividend investing, the road to financial freedom comes through the dividend gosh damn diplomats. That's right. The crowd is here, guys. But we're going to dive into the healthcare, big pharma industry, guys. We're going to feature three stocks. We're going to run them through the Dividend Diplomat stock screener, focused on, yes, that three count, that pin, 1, 2, 3, the price to earnings ratio, that payout ratio, that dividend gosh damn growth rate. We will look at the dividend yield. We'll look at stock price performance. And then let's see, are any of these mother effer stocks to buy right now and pop them into your portfolio, guys?
Well, since we're talking about that sector, popping in makes probably the best sense here going into there. So, Lanny, who's stock number one that we're popping in?
Guys, let's take a look at the most hated stock in this industry. We're talking about Pfizer, ticker symbol PFE. The no love for this stock. It's been no love for, probably the better part of 5 years now. Trading at $21.91, down 18% this year. Again, filming on April 13th, down 15.5% since last year, down 37% in 5 years, guys. PE is, the expectations are $2.95. I think they had a very solid fourth quarter as well. PE ratio is only 7.4.
Jesus, their dividend is 172. That payout ratio is 58% too. So now as if the payout ratio is at 100%, causing the price to shoot down.
Yeah, things are interesting. Obviously, when it comes to dividend growth for this stock, 15 years of doing it every year, the last 5 years since Viatris, it's only been about a penny. So you're looking at a 2.63% dividend growth rate for Pfizer.
I have nothing more to say than just sitting here shaking my head, because it's crazy just to see Pfizer almost at $20 per share right now. It was crazy to see them at $25 a month ago.
Yeah.
Here we are with these metrics sitting there at $21.91 and the PE well below 10. It's not even like close to 10, Laney. It's like well below 10.
Yeah, and the dividend yield has swelled up not to 5%, not to 6%, not to 7%, but almost 8%. They are yielding 7.85% right now.
I have nothing more to say besides Jesus, Pfizer.
Yeah, $124 billion by market cap. Still a big company. We'll have to see what first quarter earnings that's coming out here soon, guys. All right, Bert, what about this second stock?
AbbVie, ticker symbol ABBV. This one is at least the darling of the dividend community. I would say almost every dividend investor over the last 10 years has bought AbbVie at least a little bit. And if you haven't, if you're a dividend investor that's been investing for 10 plus years and you have not bought AbbVie, you better tell us in that comment section below, because I'm calling BS on that.
Yeah, when you dive into these metrics, though, Bird, trading at 175.05, down only 2.5% this year, and they are up 8.5% since last year, up 110% in 5 years. So they're very well in the performance sector here, guys. But expectations are 12.27 earnings, so 14 PE for AbbVie.
Yeah, their dividend $6.56, and that payout ratio is still perfect at 53.43%. So they are just crushing it.
Now, they were once a very high-flying growth in the dividend side. They are slowing their roll down just a little bit, but still, when you average in the 5 years, they're at 7.8%. And again, they're a spinoff from Abbott Labs, so we'll only consider the 12 years that they've been its own entity.
Yeah, their yield is 3.75%. So it's closing in on 4% once again. So if that price keeps dropping, that yield keeps climbing and will get us close to 4%.
Man, oh man, oh man, guys. Again, 310 billion by market cap. So you're looking at less than half the yield for Pfizer, almost double the PE ratio, but still a very safe payout ratio for AbbVie.
All right.
So that's the second stock, Burr. What about this third stock that I know you and I both own?
GlaxoSmithKline, ticker symbol GSK.
Interesting.
Yeah, up 2% year to date, down 14% over the last 52 weeks, and down 19% over the last 5 years. Their market cap's coming down now, Laney. Their market cap's only 69 billion. They're not in the 100 billion market cap club anymore.
Yeah, just a very interesting stocks. I know they had the spinoff, very similar to what Pfizer did. They did the Haleon spinoff, I think, guys, HLN, which was their consumer. It's very similar to what Johnson and Johnson did with Kenvue, spinning off the consumer pharma division. But they're trading at 34.64. I feel like they've been trading in the 30s for all of eternity here, guys.
I would agree with that.
Yes, what's Seeking Alpha say about their earnings expectations, and what's that equate out to for the PE?
That earnings per share is 425. That PE ratio is 8.15. So Glaxo is looking more like Pfizer than they are AbbVie.
Yeah, very much like Pfizer. Again, they pay it's an international company, so the conversion currency right now is $1.56, spread over 4 quarters. Equates out to a 37% very safe dividend payout ratio for GlaxoSmithKline.
Yeah, their dividend growth is a little muted right now because they were a dividend grower. For a while, that dividend was trending upward despite it being international. You can't really see with the currency. Then after the spinoff, they used it as an opportunity to cut that dividend and reduce it down and right-size it. So they don't really have a dividend growth history as of April 13th, 2025.
And it looks like it's starting to come back or grow in comparison, but really need some full years to start really evaluating if it sticks. Dividend yield now swelling up 4.5% for Glasgow. Very nice. Above AbbVie, but below Pfizer. Again, a lower payout ratio, lower yield than Pfizer. So it makes a lot of sense there.
All right, everyone. So we're going to put the charts up here for Pfizer, AbbVie, and GSK. Lanny, based on these three, how would you rate them? Would you say any of them are values or any of them are yield trap based on these numbers?
You would argue that Pfizer is the yield trap right now at 8%. Is there a lot of risk there? I think there's more tailwinds. I have to say, I think they've gotten through the COVID crap.
Yeah.
And I feel like now they're just like, hey, let us just get back to what we've done and what we do. You know what I mean?
Yeah.
I feel like that one is going to be looked at as the yield trap. I don't even know if I consider any of these traps.
No, I don't think so. I think if their payout ratios were higher, if you had any of them that were sitting at like an 80% payout ratio, then you could probably argue they are yield traps. I think they're pricing in some kind of tariff on pharmaceuticals. I think there's some news going on behind the scenes, some noise happening. Maybe it hasn't been announced yet, but it's getting priced into it to drop it. But yeah, some of these prices are looking very attractive, especially Pfizer and even AbbVie at a 14 PE ratio right now is pretty solid.
Yeah, I think AbbVie, you need to get them in like the 11 to 12 range on the PE to feel really good about purchasing them. Personally, I'm actually not going to buy any of these stocks. I just own too much of all three. What stinks about Glasgow is that you really want to see kind of what happens post the Haleon spinoff. Kind of see what do they do from a stock price performance standpoint. Obviously, AbbVie's been the clear outperformer here, but I'm not running to buy any of these three right now.
No, if for some reason Pfizer drops below $20, I'm at least going to grab a couple shares just to get some shares of Pfizer below 20. But
yeah, it's like the whole AT&T thing. If it drops below like 18 at that time, it's like you might as well just load it up.
Yeah, because at some point it's going to pop back up, whether it gets to 30 or 25 or where it ends up, it'll grow. So I feel better about that than I do my little get in plot position ever coming back to life. So think about it that way. not to bring the mood down, everybody, let us know what you think of these three companies. Do you think these three big pharma are value traps or great buying opportunities? Throw it in that comment section below.
Yeah, let us know, guys. Pfizer stock, AbbVie stock, or GlaxoSmithKline stock. Have you been buying any of these three during the dip, during the stock market crash, during these tough times that we may see ahead? Let us know if you've been buying. Hit that subscribe button, like this video, and you listen up, jabronis. We're about to step into WrestleMania here, guys. So you're either with us or you're against us, Jack. That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.